Good morning, everyone, and welcome to the European crossover webinar. And as you can see here in the S&Ps, we did go in and take a dip yesterday, late yesterday afternoon. I posted this a few times in the chat room, the significance of this 31.23. It actually had even been significant even the day before, prior, not just yesterday, but the day before. And you can see here how yesterday we really had a bit of a battle here. We finally closed just above it, only to close right back down on it. This is 30-minute on the 31.23. Then we dipped below it, and then we closed right back on it again. And then finally we had this dip, and I was saying in the chat room, hey, look, once it get a close, I thought that it was going to close below, but I go, once it gets to close, and that's it. I'm going to get short because of the significance. And like I said, it had not only been there for yesterday, but even for the day before. And certainly the wheels came off the caboose. One of the things I also noted was at the time, the 2-day VWAP and the same day VWAP. At the time, same day VWAP was 31.19. So obviously, if you broke that, you'd be getting below that, and that would create the momentum. And then 2-day VWAP was at 31.15. Now, this is the VWAP, but it's been already updated. But that was yesterday when we were breaking out. It's moving, you know what I'm saying? So it's not going to be at the same, and with the same day VWAP, that just I've got that updated from the opening yesterday. But the time, same day VWAP was at 31.19 and 2-day VWAP at 31.15. So once you broke beyond that 31.23, you were breaking through these two VWAPs, and that was going to create some momentum. And we saw that even going all the way into the close. And we saw a little bit of a bounce back and a little bit of a dip. And then I don't know. I thought I heard the squawk, but I had the volume down. I think this was on release of amount of people that had COVID, new cases in California. We took a pretty big drop. Maybe it might have been actually. I think it might have been here actually. So we saw the dip here, and I think it was here where they announced that one of the two. I'm not remember which one it was, but I do remember playing it in here also because I was looking for a move down to potentially, well, 3079 actually was 161% extension of this recent range, and the market held there right to the tick. Then we rallied back up, but I think it was here where the California news came out, and then I figured, okay, well, they're going to make a push down here because I had support on the half hour at 3064, and that confluence with 3067 to 38%. I shared that also in the chat room, also posted on Twitter, and we've seen a pretty good rebound since then. One of the things I don't like to have happen, and I'm glad I didn't, is I don't like to have prices or positions, not positions, but limit orders when I'm asleep. I like to know where things are because one of the things I was looking at on the way back, and the marks, I was saying, hey, look, we've got levels in ahead of the market are going to be 3081, and I think I mentioned 3088. Look how much we pushed. But that being said, look how we broke the trend line, and we were pretty oversold. I think it was trying to remember who was saying this is, he was thinking about getting long, like, well, this is in a bad area right now. So I don't know if he did get long, but you can see here, I thought maybe we might wake up this morning and be much slower and look at it. We already pushed up in here. Now we came into a pretty good area. You can see it here. 3105 is a 50% back. And maybe we can push a little bit further. Maybe we'll get up here to 3112. You can see that here on the 2 hour. But that's the way I have this laid out. It makes it easier for me, and try not to. I do still have here where I have the Dow futures and the Nasdaq, but I'm trying to keep, and even the Russell in here. But I'm trying to keep things simple because primarily I trade the SPOs, and it's just I think I've stretched myself too far trying to see where everything's at the same time. So this is how I have things, and I just trade the SPOs, and if the Nasdaq is moving or the YM or whatever's moving, hey, you know what? Let them move. I mean, it make the way I trade, and it's so short term oriented. It makes it much easier for me to have this layout and just look at things and see where they're at. And I ended up coming up with this because I kept clicking between the charts, click, click, click here. Oh, wow, that was another number here. So it made it easier for me. I know many of y'all trade multiple markets in FX. Uh, but as I mentioned, for me, the way this market moves, it's much easier to lay it out for myself this way. I can see things developing, or if I see a big, one of the things I noted yesterday was that we had that big volume on the release of it was much earlier. You're not going to see it here, which was a release on the right here, the Texas news, the amount of infections, and if you see here, look at that. See how and I pointed that out. Even though we had rallied back, push this back here. Here was and we saw this big drop on the release of the Texas news. Okay, and then look at the rest of the day. The volume was down, down, down. Finally got up a little bit in here, but my thought was, hey, you know what? This is on real, I wouldn't say thin volume, but it was much lower volume. I thought this kind of set the stage potentially for us to break lower, and eventually we did. Let's see what the exact number was. Date. Okay, there. So I'm thinking maybe they'll announce it again. It's 2 days in a row. See if I have a time when that would potentially be released. I'd be looking for a big movement at that point. So that's what we're laid out. Like I said, here we are, and we had a decent pullback down to the 38%, and here we are trying to fight back to move higher. You can see here on the 30-minute, just like we were at the 31.23, you can see how this market is really making a stand here at 31.01. Look at that. Almost made it here, closed right on it, closed just above it, and so the door's open. And also, if you look at it here, once again, I use the exponential moving averages on the 30-minute to help gauge me. Now, yesterday when we were dancing around 31.23, even though we had gotten above it, so that would have been validated, and I said at the time, any shorts, wait for the market to get back below. Still, the exponential moving average was still on the sell mode. You see that here? So we're not too far away from this potentially popping back into the buy mode. So we'll have to see what all happens. But that's where we're standing. Looking, see here, we're popping up back into this area, 3107. Why I say it's the way these markets, I don't even believe they trade rationally. I think the only thing that is a saving grace is just these technicals, and you have to respect those technicals that will, help you manage your risk. Not saying anything new, but I'm just saying I think it's a greater emphasis now with the way these markets are. You think, oh, well, they have to break down. They just don't. You know what I mean? So, but we'll see how the market trades up in here. We did make it up to the 50%, and we're not even pulling back. So you'd realistically have to look at to where the 61% would be if you don't get a pullback from that area. So let's take a look here. See how we made it up to the 23%, no pullback. 38%, no pullback. 50%, a little bit, but not even much. So potentially that could get us all the way back up to the 61%, which would be 31.21. Let's get this, move this up here. So we're still pushing here. You can see a little bit of a battle here and not giving up much ground here. Now, if we pull back into the 30, at least the 30.85, then we could say, oh, we did have a reaction for the 50%, but we haven't. We just pared back just a wee bit. So we're still plugging away in potential that we can make it up to 31.21, and we know the importance of 31.23. So we shall see. But if we do get a close like here at this 31.10, it's going to pretty much close to triggering a buy signal on this 30-minute exponential moving average. Okay. Let's go in and take a look at the news that we have out. Not news, but data. And you can see here you got 2-day VWAP. So the green line is the same day VWAP. You can see here how we held that, so that opened the door for us to move higher. And then the challenge would be up here to 2-day VWAP, which would confluence here at 31.13. That's on the 5-minute chart. So we do have Bank of England today. That's about the only thing. We do have Italian trade balance just released. But we do have a BOE today, so we'll see what happens. Cable a little bit under some pressure. Then we do have, and come rolling into the States, we have initial jobless claims, as well as Philly Fed Business Index, which was Reuters poll is going to be for -23. Last time it was -43. It could move the needle if it's not as bad. Could give it an extra little bit of a boost. Then the sub-indexes of Philly Fed. Employment, prices paid, new orders. We'll have to see how those play out. Okay. And then we do have Canadian new housing prices. That'll be out at 8:30 Eastern, along with Philly Fed and jobless claims. So that'll probably be a decent little mover at that time, which would be 8:30 Eastern. And then that's going to be it. So the show will be on at 8:30 Eastern. And then after that, at least economic data wise, things will quiet down. So once again, BOE. That'll be at 7 a.m. Eastern. I'm in Central, so that's 7 a.m. Eastern. And then we have jobless claims at 8:30 Eastern, Philly Fed at 8:30 Eastern with its sub-indexes, and then Canadian New Housing Prices Index. With that, we'll get into the news. We did get a pop-up. Look at this here to 31.08 to challenge us, and we're kind of pairing back again a little bit. So we'll have to see. Just like when it looked like it's getting ready to take off, we pair back again. Let's go and look at the news. So I thought we might try and push up a little bit higher, but and look, you see a little bit of price, a little bit of volume here. So they did goose some stops and kind of pushing it back down. So Australian and New Zealand dollars dented as data disappoints. The Australian dollar took a knock on Thursday as data showed another steep fall in jobs, while the New Zealand dollar weathered figures showing the economy shrank by the most in 3 decades last quarter as the lockdown begins to bite. The Aussie slipped further away from the recent 11-month top at 70.69. The Kiwi eased to 64.36, leaving behind the recent 5-month peak at 65.80. The Australian report showed 227,000 jobs were lost in May, more than twice the 100,000 expected. Wow. While the unemployment rate jumped to 7.1% from 6.4%. One glimmer of hope was that the hours worked had only fallen 10% between March and May, when the Reserve Bank of Australia had feared they could drop twice as much. The fall is less than we anticipated and provides further evidence that there's upside risk to the official forecast for a 10% fall in GDP in the first half of the year, said Sarah Hunter. Although it's early days, there are signs that the May will be the worst month for the labor market, she added. But the scale of the job losses mean it will likely be years before the labor market has fully recovered. The RBA has acknowledged the grim outlook and committed to keep interest rates near zero for years to come. Data from New Zealand showed the economy shrank by the most since 1991. We suspect consumption could fall by nearly 30% in Q2, said Ben Udy, economist at Capital Economics. What's more, while business confidence is now rebounding, it remains consistent with deep declines in investment. We don't expect exports to recover until late 2021. Overall, we expect GDP to fall by mostly the large 20% in Q2. Still, the RBNZ has already planned for that by cutting rates to record lows and launched a sizable bond buying program. On to the dollar. I was kind of hoping this thing would still push a little bit higher. I was trying to see if I can get a short in, but anyway, we shall see how things develop. The dollar yen dollar and the yen hold the advantage as risk aversion grows. The dollar and the yen edge higher on Thursday as growing concerns about a rise in coronavirus cases underpin safe haven demand for both currencies. The Australian dollar fell after data showed the economy shed twice as many jobs as expected in May, highlighting the damage caused by lockdown restrictions put in place by the government to contain the outbreak. The British pound traded in a narrow range before a Bank of England meeting where policymakers are expected to expand quantitative easing in the face of a sputtering economy and rocky trade negotiations with the EU. A surge in new coronavirus infections in several U.S. states and the imposition of travel curbs in Beijing to stop a new outbreak that has served as a reminder about the risk of reopening economic activity before a vaccine has been developed. Upside for U.S. stocks and other risk assets has dwindled. A moment, even lost my place. Saw a little ding from Twitter. I thought it was something else. Well, the surge in coronavirus infections, impositions occurs to stop a new outbreak, have served as a reminder about the risk of reopening economic activity before a vaccine has been developed. Upside for stocks and U.S. stocks and other risk assets has dwindled because more people are talking about a second wave of virus infections, said Junichi Ishikawa. This supports the dollar and the yen because they're both safe havens. The pound has its own problems. The British economy is not in good shape, and a hard Brexit remains a risk. And we already knew about the, I'll see. And we do have the morning bid, so I want to get to that. So the second wave is building. A second wave of infections in the U.S. and China threatens to undermine the equity market rally, with U.S. and European stock futures in the red and risky currencies such as the Australian dollar struggling. Several U.S. states, including Oklahoma, where President Trump plans a campaign rally on Saturday, reported a surge in coronavirus infections. The daily count of infections also hit a new benchmark in California and Texas. In China, resurgence of COVID in the country's capital over the past week has infected more than 100 people and prompted authorities to shut schools and neighborhoods to prevent wider contagion. The People's Bank of China also chipped in with 20 basis point cut in the 14-day repo rate on Thursday, but the wider concern is a V-shaped recovery priced into the equity markets. World stocks have rebounded nearly 40% since March on expectations the global economy will quickly recover in the July to September after a dismal April to June. Australians' unemployment jumped to the highest in about 2 decades in May as nearly 250,000 people lost their jobs because of the coronavirus-driven shutdowns. The Asian Development Bank now expects developing Asia, a group of 45 countries in the Asian Pacific region, to barely grow this year, reflecting the impact of the lockdowns. The Bank of England is expected to announce an increase of at least £100 billion in its bond purchase program. Money market funds futures are predicting the central bank will take its interest rate into negative territory next year. In Switzerland, the central bank is widely expected to leave the policy rate unchanged at a minus 3/4 basis points. Let's see here, the increase in divergence between the markets and data has prompted some major investors, such as Jeremy Grantham of GMO, to cut net exposure to equities in recent weeks. The S&P's forward price-earnings ratio, a closely followed value evaluation metric, now stands at 22, a low that has less seen 20 years ago during the dot-com boom. The cost of purchasing puts on the S&P index remains near 2020 highs, while the dollar has been the currency of choice in currency markets this week. The widening spread between U.S. and 2-year bonds, often considered a sign of a recovering economy, has stalled this week. So we'll see what happens. So with that, let's go into the analysis. Okay, here we are with the euro. The euro defended the bias chart support on Wednesday, holding at 1204. Yesterday we had our bias chart support. You can see here at 1210. So it defended it, holding at 1204. Um, you can see here down here, right there. The pair remains susceptible to a further pullback. Resistance will be 1295 with support at 1191. So 1191, and this drops to 1295. Onto the cable. Cable finished a bit weaker. You can see right here. Finished a bit weaker on Wednesday. With the BOE on tap, support will come in at 2421 with resistance at the weekly level 2602. You can see the significance of 2602 here. So we're thinking potentially we can come down here to 2421. And I'm just going, you can see right in here, right there's 21. You see right here, you can see all these touches of volume coming in here. It's almost at this low down here, but not quite. So you can see some good touches of volume. So it's going to be 24, 21. Looks like there's a lot of volume traded there. So we had 24.30 yesterday, so we're moving it down to 24.21. On to the Aussie dollar. So the Aussie stayed in a tight range on Wednesday. Many of the currencies did. Many of the majors. Look at this. Look at that tight range on Wednesday. The Aussie stayed in a tight range on Wednesday. A pause to move lower appears in the cards, potentially to 66.80. Immediate support is going to be at 68.02, still much lower down here. Resistance will be 69.30. So 68.02. And we'll keep in resistance at 69.30. No changes there. On to the Kiwi. So the Kiwi pushed higher on Tuesday. Okay, actually, you know what? I remember now. There's no notes there because no changes in the Kiwi. Look how tight that range was. So I kept this the same. So no changes. Look, that range yesterday was just tight as a drum. Look at that. So no changes. Kiwi's going to remain the same. 63.36, although that's way the heck down here. I was thinking we should break, but we just still haven't. But I'm still going to keep it there because potentially I think we'll make it down there with the high at 64.93. On to the dollar CAD. Now the dollar CAD twice defended 35 even. I meant, from Tuesday to here and Wednesday here. I think on Tuesday, I think our support was 35.02, I believe. And then we did dip it a little bit lower to 34.88 or something like that. But you can see they both defended 35. So the pair is open to some short covering. Resistance will be at 36.70 with support at 35.42. And we're allowing for some short covering. We'll see whether it happens or not. We do have Canadian housing data today. And on to the peso. Now, the dollar peso held support on Wednesday, defending the 22.09 in a tight range. Resistance will be 22.60, with support at 22.12. Wow. another tight day for another one of these majors. So it's going to be 22.12. And resistance will be 22.60. Let's go move on to the dollar yen. The dollar yen closed weaker on Wednesday, opening an opportunity to challenge 660. Resistance will be 736. The low so far has been, oh, okay, 666. So not too far off. And 736. Onto the cash dollar index. So the dollar index closed slightly higher in a tight range, just like all these majors. Look at that. Resistance remains 97.64 with support now at 96.81. Boy, it's a tight range right now today. So 97.64 is going to hold. The difference is going to move up the support to 96.81. And that takes care of the majors. And let's go into the cross rates. So we had our support at 68.51. Yes, for yesterday. We've come down to 68.54. So I'm just going to leave it the same, 68.51. And the only thing is that so the 68.51, we're going to keep this. The only thing is we're going to lower you see the close here? That'll be resistance. So it'll be 69.47. Let's go and move into the euro yen. Well, you can see, boy, we took a pretty good little dip here in the euro yen. The 2046, and boy, they took a pretty good dip down here to this key level. Well, they almost made it to the key level, and that's going to be it. So it's going to be 19. We did actually hold up pretty good yesterday. Yesterday, our support was 2046, and the low was 2017. Although we came off the lows to close at 2031, but obviously with that closing, we're taking out these bodies here. You see that? Including the prior day's low, open the door for us to move lower. So here's that major level. We have it in pink. You can see all the amount of trading going on. So that's our support today, 1975. With resistance, well, resistance is going to be, I was going to say the prior day's low, which it is holding there, but we'll put it at the close from that bar, which is 2064. Now let's go into the euro on. Well, this is still mixed bagging it. You would think we'd be much stronger in light of the Aussie data. You know, the employment data, which was certainly negative, twice the loss than they expected, and we're still sitting here like a stuck tire in the mud or stuck wheel in the mud. So no changes. We're just going to keep this the same here in the euro odd. No changes whatsoever. Interesting. I would have thought we'd been much stronger. Needless to say, we're saying the exact same thing with the Euro Kiwi. Look at that. I mean, we're almost identical, except that the range is a little bit tighter. Unbelievable. So obviously, um, no changes here in the Euro Kiwi. Mm. And let's go to the Aussie. Now we did come down here to 72.95, and I had support yesterday for 72.98. We're going to keep this one the same. Although it did make it down to 95, we had 98, so we're going to keep that the same. The only difference is on the upside, we're going to go, you see the close right there? That's going to be resistance, which is right there, 74.27. And let's go into the guppy. Now this won't be the same because we do have the Bank of England. Well, we're still dipping lower. I think that it still has the potential to go a little bit lower because, well, that's already expected. They can do QE, so we might even see a turnabout. But trying to go with volume right there. You see that? 33.05. You see all these touches coming across, including this close here. That is going to be 33.05. Whoa, we just spiked up in the spoos. I'm not sure what happened. We just jumped up really fast. We're now at 31.11. We jumped up to 31.12, which is the 2-day VWAP. 31.13, almost at 31.13. We almost jumped up to that. So, and we're just about close to getting a buy signal on the EMAs. So we're going to go with. Should have had the stupid squawk on, but I didn't. Oh, what happened? Hang on. Oh, Chinese CDVC virus export says Beijing's outbreak has been contained. Huh. Chinese CDC virus export, Beijing's outbreak has been contained. Hmm. They went with that. Hmm. And is now under control. That's going to be 33.05. Here's where the real volume is right here. So let's just stick with that. 32.52. That's where the real volume is. Let's see, 32.52. With the resistance at 35.31. a wide range because of BOE. And let's go to the sterling odd. Damn, we're still pushing higher. We're at 31.14 now. Well, this is going to be support right here, 80.89, right there. We could move it a little bit lower, but holy smokes, I mean, that data was weak on Velocity. 80.89 and resistance. Wow, we are still pushing high, 31.17.5 now. Right there. Let's go right there with that high. 82.86. Okay, and there's the bias chart. And we'll get that posted. We'll take a quick look at the spruce, and then we'll call it a day. Yeah, Mark said your ESPN chart had three tops of 31.08. Is that a triple top, something significant? Not if it's a 1 minute chart, Mark. Yeah, because that's what I'm saying, because it's a 1 minute chart. But it's just a level you could look at. We'll go to that. I'll tell you. So if that was if that was a key level, yeah, you could fade against that. Obviously, the news triggered that. But once again, I use that. Once again, look at how we're above 2-day VWAP. You see that? So remember, here's, and really I didn't even want the 2-day VWAP on this. I'm keeping it on the 5 minute now. You can see here we've pushed up. Now we're actually making a run up here to, that's why I updated. Remember I told you we hadn't even backed off much from the 50%. So potentially we could move up here. Obviously, one of the things that you have to factor in is, we showed this earlier. Where were we when the news came out about the Texas infections? For the second day in a row, big Texas infections. It was, we were, that's when the news broke on Texas infections. So where were we? We were at 31.21. So you have to think about it like this. Everything was hunky-dory until the Texas infection story came out. So that would suggest that to put us back to hunky-dory would be the 31.21, and there'd be the 61%. You see here? And that key 31.23. So what I do is I'll put these levels here where the market has reacted, but of course it's a 1 minute chart. What I'm more interested in is, you see here, look at the volume. Look at the big jump in volume. So the same way we saw it in when the news came out with Texas, you see how we had that big jump. So to me, that flipped things on the other direction to suggest that the market was open to moving lower. And even though we rallied higher, it was really on much lower volume throughout the day. We saw a little bit more activity later on the day. So now you're seeing, look at this big jump. So although we did right now, here's a good thing right here. So if you were scalping it, you see how you've got a little bit of a hanging man. You could have taken a short right here now and say, how much further upside have I got against myself? Well, if I'm getting short around 31.18, look, here's 31.21. It's a 61%. I would have only taken it as a scalp because, look, we're close to flipping this to bullish. So once again, I was doing the webinar. I don't have enough time to react. But if I saw this real quick, I may take a quick scalp thinking, okay, but you can see here. So it isn't a bad scalp. I mean, but once again, I would not necessarily be stepping in to hold it. because we are pretty close to flipping this to a buy mode on the exponential moving average. So ultimately, I think we'll have to come up to this 31.21, I would think, and that would have us even Steven from when we got the Texas infection news, and we'll see what happens. But if you had done a real quick scout, maybe you're able to jump in, you see this big jump. But this big jump means that probably this market was thinking, just like I remember I was saying, wow, I thought maybe we were going to move a little bit higher. So probably people kind of got short in here, and now those people got stopped out. They probably had their stops just above, and may have bought. Some people may have gotten a little bit long here, so potentially I think we move higher. And then when you look at the exponential moving average, we're going to get ready to flip to a buy mode. So and had it not been for this, I might have just jumped in real fast and did a short. But like I said, I was doing the webinar, but with this hanging man here on a 1 minute, probably would have been able to catch like 5 handles maybe, although the move was stretched as far as 6 or 7, I guess it was. But this, I knew this in the back of my head, hey, we're close to flipping this to a buy mode. So I would wait for it to come up in here if I was going to take that, but we shall see. But once again, like I said, you can see here is that we're challenging 2-day VWAP right here. So once again, if you get above that, now just the same way we broke yesterday below VWAP and second day VWAP, that created that momentum going lower. The same thing here. You could end up pushing right back up here. So anyway, that's what we have for today. Thanks for joining us here on the European crossover webinar, and we'll see you in the chat room.